We are doing a sum of May, June 2022, paper 22. And this is a sum of depreciation. Okay. Can you read out the first question?
V Limited owns various non-current assets. Non-current assets depreciate due to a number of factors, including wear and tear. State two reasons other than wear and tear why non-current assets depreciate.
Why do they depreciate?
Economical changes and technological changes.
Okay, fine. What did you say? Can you tell me again?
Economical changes and technological changes.
Economic factors
Okay.
and technological changes. Okay, read ahead.
Business must apply the consistency concept when accounting for depreciation. Describe the consistency concept. So the consistency concept is when the method that you use it every year. You keep it the
Method,
same.
what
You
do you
don't change
say?
it.
That the accounting methods.
Okay.
Yeah.
That you the accounting method that you use are supposed to be kept the same throughout the accounting year or going forward as well.
So accounting methods used should be followed consistently.
Yeah.
It should be followed consistently from year to year. Why?
So that you can
To
compare
enable
it with the
comparison.
you can compare it with the previous year.
To enable comparison. So
Yeah.
accounting methods used should be followed consistently from year to year to enable comparison. Now read ahead, please.
The company's financial year ends on 31st December. Property was purchased on 1st January 2019 at a cost of $850,000. Property is depreciated at 5% per annum on cost.
Okay,
On 1st
wait.
January, okay.
You have purchased the property and the property has depreciated at 5% per annum on costs. On 1st January, the directors have decided to revalue the property. Okay. So the new valuation of property will become 120,000. Are you with me?
Yeah.
Now, if I talk about the property, so it is 2019, 2020, and in 2021 you are revaluing. Are you with me?
Yeah.
Okay. In 2019, it was purchased for 850,000. Yeah. It's 2019, 2020, and 2021 you are revaluing. So what is the depreciation?
It is 5% per annum at cost. 850,000.
42,500.
Yeah, 42,500.
So this becomes 807,500. Now in 2020, it again is 807,500. Depreciation on costs.
807.
The amount of depreciation would remain the same. So it is 765,000. 765,000. And now over here, you are revaluing it for 1,200,000. Are you with me?
Yeah.
So the property which had a carrying value of 765 is now valued at 1,200,000. So can you tell me the value of the property is going upwards by how much?
Okay.
So the property had carrying value this much.
4 lakh by
The
435,000
accumulated depreciation
is 1 sec. 42. It's 85,000.
85,000. Okay, fine. So now it means that the value of your property is going up. The valuation of your property is going up, and all the accumulated depreciation that was there is getting waived off.
Hmm.
Are you with me? That
Yeah.
means property is waived off, this is waived off, the accumulated depreciation is waived off.
Okay, Miss, what do you mean by waived off?
Now it will not appear, right? Property is
Okay.
getting valued upwards.
Hmm.
So how can you have the depreciation of the property appearing in your balance sheet?
Okay. Yeah.
Property is getting valued upwards. How can you have the depreciation of this appearing in your balance sheet?
Hmm.
Are you with me?
Yeah.
So the accumulated depreciation will also go away, right?
Yeah.
So provision for depreciation would also go away. How much is the provision for depreciation?
85,000.
Valuation
That
850,000 minus 1,200,000, 350,000. Okay, so this was the cost of your property, and now the cost is becoming this much. So property, the cost column is going upwards by how much? 350,000. Understand this properly. In your balance sheet, non-current asset, you have the cost, provision for depreciation, and the net book value. Are you with me?
Yeah.
First, the cost was 850,000. I'm talking about 2020. Provision for depreciation is 42,500, and net book value becomes 765,000.
165,000.
On 1st January, this is going to become how much? 1,200,000.
Hmm.
So property is going up by 350,000, the cost column.
Yeah.
Will there be any depreciation? Even
No.
this will go away because if you keep this 85,000 over here, then amount will change, right?
Yeah.
So you have to cancel this out. And on 1st January, the valuation of your property becomes 1,200,000.
Hmm.
Okay?
Yeah.
Sure.
Yeah.
And revaluation reserve would be credited by how much?
4,35,000.
Are you with me?
Yeah.
The next part. Can you please read it? What do they want from you?
Calculate the charge for depreciation of furniture and equipment for the year ended 31st December 2021.
You are in which year?
We are in that year only, 31st December 2021.
Okay, so Jan to December is our year end, correct?
Hmm.
Okay, fine. So it's 2019, 20, and 21. This is the column that we always make. Costs, depreciation, net book value, correct?
Yeah.
Okay, come on, read.
Furniture and equipment was purchased on 1st January 2019 at the cost of 140,000.
Hmm.
Furniture and equipment is depreciated at 10% per annum using the reducing balancing method.
Hmm.
On 1st September 2021, the directors sold the furniture and equipment which had cost $21,000 on 1st January 2019. A full year's depreciation is charged in the year of purchase but none in the year of disposal.
We'll take it slowly, slowly.
Hmm.
The furniture and equipment was purchased for 140,000.
Yeah, in 2019.
Depreciation is 10% reducing balance method.
14,000.
Net book value
1,26,000.
hmm.
Then depreciation is 12,600. Net book value is 1,34,000.
Okay. What is a depreciation policy?
Depreciation policy is that full year's depreciation is charged in the year of purchase, but none in the year of disposal.
None in the year of disposal. So what is my year of disposal?
Year of disposal is 2021.
Okay. So on 1st September, directors have sold the furniture and equipment which had cost 21,000.
Miss, the 2020 net book value is 113400.
Sorry?
It's 113400.
Okay. So the directors have sold the furniture and equipment which had cost 21,000 on 2019. So we usually prepare it for the assets sold separately and for the assets that we have separately. Okay. So this was our assets sold at 21,000.
Yeah.
Let's prepare our working for the assets sold. 1 minute. Okay. Come on, tell me the working for the assets sold.
21,000 will be the cost. Depreciation will be 2,100. Then net book value will be 18,900.
Okay. For
This is for
2020?
This is for 2019. Then the cost will be 18,900. Depreciation will be 1,890. And net book value will be 17,010.
They want a depreciation charge for the furniture for the year ended 31st December 21.
Yeah.
This is how much? Okay. So 17,010 is the net book value of the asset that you've sold, right? What is the accumulated depreciation of the assets sold?
It is 3,990.
Okay. So this we will make for the remaining assets. Yeah? 1,40,000 is the cost of your total assets. 21,000 is the cost of your assets sold. 119,000 is the cost of your remaining assets. Yeah? Come on, give me.
So you want me to do into 10%? Okay, so it will be 1,190.
Huh?
1,190.
Darling, 11,900.
Acha, okay, sorry. Got it.
For 2020?
10,710.
Net book value?
It is 96,390.
For 2021?
9,639.
Net book value?
It is 86,751.
Okay. So what is the depreciation charge for furniture and equipments for the year ended 31st December?
32,249. 32,249.
For which year they are asking?
For which year do you want to? Acha, 2021. Okay. So you will take for all three that you've calculated.
For the current year, how much is the depreciation? For the year
It's 9. So it's
I'm not
9.
asking accumulated depreciation. They're
So it will be
asking
9,639.
depreciation for the current year. What is the depreciation for the current year?
9,639.
Yes, just understand the question. What are they asking you? Depreciation charge for the current year. If it was month by month basis, then for the current year, it would be this depreciation plus depreciation of assets sold up to the date of sales.
Yeah.
But we have a policy, no depreciation in the year of sales. No depreciation in the year of sales. So my depreciation of the current year is how much?
9639.
Okay.
So, Miss, why did we have to calculate the rest of the assets ka value? Why couldn't we just make the asset account, take the balance, and then find the cost?
See, darling, you in the current year, you have to understand one thing, that in the current year, you have sold the asset whose cost is 21,000. So this asset has gone away and there is no depreciation of the asset sold in the year of sale. So that means you will have to charge depreciation only of your remaining assets in the year 2021.
Okay.
So in the year 2021, your remaining assets is how much? 140,000 minus how much?
21,000.
Okay. Your remaining assets is 119,000. And for your remaining assets, you can show this person. So you have the depreciation charge for 19, depreciation charge for 20, depreciation charge for 2021. And they want depreciation charge for 2021. Are you with me?
Yeah.
You're sure?
Yes, miss.
Let's go ahead. Come on.
Okay. Prepare the motor vehicle disposal account for the year ended 31st December 2021.
Okay.
Motor vehicles were purchased on 1st January 2020 at a cost of 84,000.
1 minute, huh?
Yeah.
2020, cost
At
is
the cost.
84,000. Depreciation policy is what?
A full year depreciation is charged in the year of purchase, but none in the year of disposal.
Okay, reducing balance method. Okay, in 2021, you have purchased a new motor vehicle. So can you give me for 2020?
You'll do 84,000 into 20%. It's 16,800.
Yeah.
Yeah.
Now I have one asset that is 67,200. And in 2021, I have purchased another asset at a cost of 44,000. Correct?
Yeah.
Okay. A check for 17,000 was paid for the vehicle. That means this asset that was purchased for 44,000. What did I pay?
You
I
paid
paid check of 17,000.
19,000.
And the balance was covered by
part
part exchange of a vehicle that had a cost of 40,000. That means there is a part exchange of vehicle whose cost was 40,000. What is the other meaning of this?
Oh, that the value of the vehicle,
Let's
the selling price of the vehicle is going to be 44,000 minus
No.
17,000.
This means that you have disposed a vehicle.
Yeah.
You have disposed a vehicle whose cost is how much? 40,000. Yeah.
Yeah.
What is the written down value of that vehicle?
You'll have to calculate it. No?
How will you calculate?
by doing
40,000 is the cost.
20%,
Depreciation 20%.
which is 8,000,
Written down value.
32,000.
So 32,000 was his written down value. There was no depreciation in the year of sales. So when it was sold, the written down value was 32,000. Are you with me? Okay, fine. Now let's talk about the selling price of the vehicle. Accumulated depreciation of the asset sold is 8,000.
Yeah, the selling price will be
Now this was
27,000.
exchanged for 44,000. 44,000 was the cost of my new asset. Yes.
Yeah,
17,000 is paid by check. 44,000 is the cost of the new asset. 17,000 is paid by check. So I have got 27,000
as the
for
selling price.
vehicle exchange. Selling price. Are you with me?
Yeah.
Come on. Motor vehicle on the debit side, I will write the cost. Here I will write the accumulated depreciation of the asset sold. Yeah.
8,000.
I did not get money for selling it. I got a new motor vehicle in exchange.
For part exchange, motor vehicle.
I got a new motor vehicle. Instead of money, what did I get?
New motor vehicle.
Okay. So the selling price of my motor vehicle that I have sold is 27,000, but I did not get money. I got a new motor vehicle.
Yeah.
So the motor vehicle whose book value is 32,000 is disposed at 27,000. Motor vehicle whose book value is 32,000 is disposed at 27,000. So I'm getting a profit or a loss.
You're getting a loss.
I'm getting a loss on disposal of how much?
5,000.
If I'm getting a loss on disposal, income statement will be
Debited.
and motor vehicle disposal account will be credited. This is loss on disposal. So it should be 40,000. Please check. I'll wait for you. With this,
It's
we
40.
complete May, June 22, paper 22, question number 2, which is of depreciation. So it had 3 different parts. First for furniture, then for motor vehicle. So it had 3 different parts.